Hello and welcome to the Forex Form Guide, where we take a look each week at the major currency pairs through the lens of WD Gann analysis. Tonight, I'm going to walk you through in a little bit more detail my process in trading an FX forecast. At the moment, if you're new to the channel, we've been tracking a forecast for a crash on the Australian dollar US dollar in September. We haven't seen that yet. If anything, we're seeing a crash to the upside with a strong trend in a year that's been pretty much sideways. So we are seeing that increased activity, albeit to the upside rather than the downside, but we're going to take a look at that. And I want to walk you through the process that I take around trading an FX forecast as well. Many traders, when they start out, think that a forecast gone wrong is a disaster. And look, while I'm not enjoying the fact that the forecast hasn't come in, it's not a disaster. It's far from that. Sometimes you can be dead wrong on the market and you can still make money. Other times you can be dead right on the market and actually not make money. It all depends on how you trade the forecast, and I'm going to take you through that in just a moment. After that, we'll take a look at the Australian dollar US dollar, the pound US dollar, euro US dollar, and US dollar yen. If you're new to the channel, welcome. Fantastic to have you here. There are some videos at the top of the page to get you started. And if you do find some value in this or any of my videos, I'd really appreciate it if you could click on the like button, leave a comment, and subscribe to the channel. It does help me to spread the teachings of WD Gann to more people. Before we get going, a quick disclaimer: this video is for educational and informational purposes only and should not be considered financial investment or trading advice. Bottom line there, do your own research, trade responsibly. So let's talk about trading an FX forecast now. There are several components to consider here. Obviously, the first one is when. When is this going to happen? When is my forecast for? For me, those forecast dates come from Gann cycles, both his planetary cycles and his numbers or his law of vibration cycles. And they give us a starting point for a potential trade. And that's what we're dealing with here, a potential trade. So as an example of a forecast, I've been looking for a strong move down on the Australian dollar US dollar from September 2025 into early October. So at the end of August, early September, I was looking for a top and looking for the market to run down. So far, we've actually had a pretty steep move, but it's been to the upside. Now, in this case, the forecast that I had for the top was for the 31st of August. That was based on a cycle from Gann's book, The Tunnel Through the Air, called Robert Gordon's 7 Days. Now, that cycle was telling me that the Australian dollar US dollar was due for a strong move down in September. That hasn't happened yet. So I have to ask myself the question, well, what could have gone wrong? Well, the first thing to consider is my cycle alignment incorrect? Gann said that if you have the right starting point, you get the right end point. So maybe I've got an incorrect cycle alignment. We'll touch on that in just a moment. Or have I missed an inversion? That's more common. Or thirdly, are we just in a choppy move? Is there some cycle interference that I have missed or don't fully understand yet? So there's a few things to consider there. When it comes to correct cycle or incorrect cycle alignment, here's an example of how this cycle has played out over, there's a good 12 months worth of that cycle with this alignment here. You can see in a number of cases, the cycle has picked up the top running down to the bottom in a steep move there. I mean, that's telling you you've got downward cycle pressure from this top here. This was a July to August move in 2023. Really good, strong move there. Look at this clean move, low to a high, bang, high down to the low, bang, up to the high, bang, down to the low, up to the high, down to the low, etc. Like really, really clean. Over here as well, from the high down to the low. It doesn't look like there's a mistake there in the alignment. But what you can also find with this cycle is it can be a little bit tricky at times. Look at this example here. That's a swing low in the market, and it does run up to that July high. However, in the meantime, you've got this sideways messy period over here as well. So in other words, the market low came in, and then we exceeded that low, and then the market shot up to this point. According to Gann, these cycle points are mathematically knowable in advance. That means that using mathematics, you can calculate the prices in advance. Very, very few people, to my knowledge, actually know how to do this. Some claim to be able to do it. Very few can demonstrate it or are prepared to demonstrate it. But you can see the market move from this low up to there, and that's a correct alignment of the cycle and a correct reading of the cycle, but it can be difficult to trade because of this move down here. Now, what you do in this case is you combine this with a smaller cycle. So this is a large move from here down to here, up to the top here. But in the meantime, there are smaller cycles at play. So from this low, you can see a run up to this top here, and then a run down, run up, run down, and a run up there. So if you're using the smaller cycle here, well, you've got to trade here, and then it's telling you there's a top and a run down due. The market hasn't really gone anywhere, so you might take profits or move stops to break even, and then as the market runs down, you don't lose any money there. And so during that time, you're looking at only the long trades for this smaller cycle. So you'd ignore perhaps that short trade there and the short trade there, but you could look to take the long trade, didn't really work out. Look to take a long trade here, that one's okay. Look to take a long trade here, bang, there's your big strong up move there. So it could be a case that we will look back at the end of the month, and obviously it's too late there, but we might look back at the end of the month and realize, oh, okay, it was just a little bit slow to get going there, and it was a move like this. Also, during sideways moves in the market, you can see it can be a little bit choppy and messy. Here is a good example where you've got a top down to a bottom. And if you had shorted right at that top there, you could have ridden it down to this low, but it would have been really awful to trade as well because the market ran down neatly there and then it shot up there and almost took out that top there. And then it came all the way back down here again. Similarly here, during this sideways move, shot up, shot down, shot up, shot down. It's just a really messy, awful period to trade. So maybe we've got something going on there as well in the Australian dollar in the current market. Ultimately, you've got to make up your own mind. You have a look at this and you say, well, is it an incorrect cycle alignment? Or is there perhaps something else going on? Is it a messy move, for example? To me, I've tested this over a long enough period that I believe I have the right cycle alignment. So it's just a case of what happens next on the market. Now, I spoke about the smaller cycle that ties in with this. I made a mistake at the start of this. I said that it should have been at 27th August, where in fact that smaller cycle date was more likely to be the 31st of August. So I've made an error there. So just ignore that where I've said that in the past if you're going back through old videos. The next date after that was for the 4th or the 5th of September as a low. That did come in. However, due to the very sideways week that we had, I wasn't sure whether perhaps that 5th of September had come in as a high. So there may have been a mistake there, but it does look now as though that low were correct. So the next dates to watch after that were 11 September for a high, 18 September for a low, 25 September for a high. On Friday, we had our high on the 12th of September. So obviously the next step on the smaller cycle would be watching for a run down to the 18th of September, give or take a day or two either side. And here's where your form reading skills will really come into play. There is still a chance that this crash could be on. If we have a really strong move down to the 18th of September and then a weak run up into that 25th of September top, well, there's a chance that that crash move is still on. However, at this point, I think it's more likely that we are running up into a top on the 25th of September. And I'll tell you where I think that's coming in just a moment. So bear in mind, a strong run down from Friday's high, the 12th, could mean that the crash is still on. We should know by about Tuesday, Wednesday, what's going on there. I'll track that into the September target date and watch what happens. But more realistically, a weak run down, say over the next few trading days, would make the 25th of September a very interesting place to watch for the next intermediate top on this market. Now, when it comes to those intermediate tops and bottoms on this market, if you've been following the channel, I have nailed quite a few of those. I did mention in my December forecast last year to watch that January and February low areas. Later, I did have that April low, the big April low on the 9th of April, running up to the 7th of May as well. So a lot of these dates have worked. That 25th of September date would be a good one to watch. Whether it's an extreme top or whether it's a lower top, it should be a good date to watch regardless. Now, what we've covered here with the dates, many people will think that's the start and the finish of it, but it's just the start of it. It's giving us an area to watch for potential trades that we might take. Once we know our forecast date, the next thing is to look at where. So we know when the date is due. Now we have to look at where we are in the market. And that's in terms of position of the market and in terms of the price of the market as well. So as I do each week in the Forex Form Guide, I take a look at the monthly, the weekly, the daily, and the 4-hour chart, and I have a look at what they're telling me in terms of position of the market. And a great reference for this, if you want to do a little bit of this kind of work, is the second chapter of Gann's book, How to Make Profits in Commodities. It's all covered in detail in that book. For me, I learned it from a company called Safety in the Market from their Active Trader program. But looking at this, again, if you've been following the channel for a while, I was looking for the turn around here. I was initially a little bit early, but I did note before the week started over here that we did have an overbalance in price here. Again, that's part of form reading. So I wasn't tempted to try and enter the market here, but I did try and enter it up here, which I'll talk about in just a moment. In terms of price forecasting, there are a couple of very interesting levels that we haven't quite touched. I was thinking that we might have touched, and this was earlier in the year. I've been talking about these levels all year. The 50% milestone here on this monthly chart at 67.56, that's half of the last run up there. And also the 75% retracement here on the weekly chart, that's 66.84. This one is 67.56. These are two good price levels to watch. Now, it doesn't mean that the market must get there, and it doesn't mean the market will stop there if it gets there, but they're two areas that I was watching for a price target on this market. So it's not just am I at the forecast date? It's, well, I'm at the forecast date. Where are we? Where is the market in terms of position? Where is the market in terms of price? Now, as I said, if this crash is still on, we should see a strong move down early in the week, run up into the 25th of September, and then bang, continue to the downside there. I think it's more likely that we will run up to a 25 September high. That's how I'm reading it at the moment. And I'll talk in a moment about the next price level I see at 67.76, which would mean that the market would just poke through that 50%. And if it comes back below there, often when you see a 50% retracement like this, if the market retraces deeply, it will come up and touch that 50% milestone and crash from there. So it could just be that I was a little bit early in terms of the crash date itself. That's one possible scenario there. But again, it just comes down to what the market does this week. Obviously, a very strong finish to the week. We'll see what happens on Monday and in particular Tuesday and Wednesday. So those are the first two steps when it comes to trading an FX forecast. When is my forecast date? And I get those from Gann cycles, from Gann's novel, The Tunnel Through the Air. And where are we in terms of the position of the market and in terms of our price forecasting as well. And as I said earlier, I like 67.76 as a price cluster to watch. And any time in September or even October is fine by me for that. The third thing that I would then look for is a setup. So what am I actually looking to trade? You're not just trading because your date has come up. And you're not just trading because the market is in a certain position or a certain price level has been targeted. You're looking for a specific setup in the market to trade. For me, I like a few different kinds of setup. My favorite ones, though, would be price clusters, like that 6776 number that I mentioned, and also things like double tops and double bottoms. Really simple, but really powerful as well, and definitely worth watching. Once I have a forecast date in the right position that gives me a setup, I still don't just jump in. I want to consider, how am I going to trade this? And for me, I have a method of trading that I call smart trading, and the S in smart stands for a small risk entry. So I might have a really good forecast date and it's in the perfect position and a nice setup comes along. But if I can't get a good entry into that market, I'm making it really difficult for myself to get a high reward to risk ratio on the trade. Think about it. If you're expecting a 1,000 point move on the market, but you don't get a setup until the market has already moved 200 of those points and you have to put your stop loss all the way back above the top, well, your reward to risk ratio is only 4 to 1. You know, a 1,000 point move, 200 points are gone, so you've got 800 points left, and you've got a 200 point risk. 800 divided by 200 is a 4 to 1 reward to risk ratio. It's just not worth it. I've taken a 56 to 1 reward to risk ratio trade out of a simple 300 point move in the market. So for me, it's about how I trade it, and it has to be a smart entry for me. I will talk more about smart trading at some point on the channel, but for now, just keep in mind those first two steps there. S is for a small risk entry, and then M is to move your stop to break even as quickly as possible. Here's an example of a couple of smart entries. I did take one on the 27th of August. As I said, I was wrong there. The actual date was a little bit later, so that was up here. But I did take this. We had the market failing to run up on some good news. So it ran down, gave a little hourly lower top there. It was a very small risk on entry because it's a small entry bar there. This is a first lower top there. And it's not the first lower top. That's the setup. It's the how. It's the entry. It's the ability to get a small risk on entry there. It was only about a 7-point bar there, so you're looking at a 9-point risk on the trade. Now, the trade ended up as a loss. The market ran down and then it shot up after that. I did have a very strong feeling around here that I should move my stop loss to entry plus commission, but because I was looking for a big crash, I wanted to give the thing room to breathe. The market came back up and took me out for a loss there, but that should have been a break-even trade there. The other one, as I said in the previous week that I took, I was looking for a 6553 price target up here. The top came in at 6560. When you can get a nice tight price forecast, Gann's lessons are good for this. Arguably better lessons are those safety in the market lessons that I mentioned before. They will help you get a number of the tops and bottoms in the market each year. You won't get all of them, but they will give you a lot of great entries like that. Most of my really tight entries into the market come out of a price setup taken straight from that Safety in the Market Active Trader program. So there are dozens and dozens, probably hundreds of Gann courses out there. The Safety in the Market one is one of the very few that I think is worth checking out for all traders. But that's an example of a smart entry. You get in close to a turning point, you put a stop loss, 10, 12 ticks away for me on the Australian dollar. The market runs away a little bit. And then as it's coming down here, makes that big lower top there, you can move your stop loss to entry plus commission. So in less than a day, you're at break even on the trade. You're not going to lose any money there. This one, I did move the stop down. We had a good crash here. I actually thought here in early September, and a few of you did too, based on your emails to me, I thought that this was it. The crash was starting and that we were heading down. And it didn't. It rallied hard, mucked around sideways, gave a little double top there on 50%, and then started down. I thought, okay, looks like it's going down, but I can move my stop behind these double bottoms here. So I actually did bank a little bit of profit there on this double top trade. And then as you can see, I got taken out there and the market ran up. And then we had a run down here, nice strong price cluster there, and then we haven't looked back since there. We've been running up ever since then. But that's just a couple of examples, and you follow the steps there. You've got a target date that you're watching for a top. You've got the position of the market. Over here, you'd had a run up there, a pullback there on the daily charts. So this was shaping up as a failed second leg up there. I was okay with that. And then over here, you had an equal run up compared to the last run up there. That was acceptable as well. And you had that nice tight price target there as well. But you've got the forecast date, you've got the position of the market. You've got setups here in the form of a first lower top. And here was just a price cluster up here. And then you've got the ability for a smart entry. Sometimes your entry bar, here your entry bar was small. Sometimes your entry bar looks like this, and you've got to put your stop loss below the entry bar, and it's just too big. It's not going to give you a high reward to risk ratio trade. But there's your how in the entry. I want to take a smart entry. However, even before pulling the trigger there are two extra steps. Number one is why. Why am I taking this trade? And what I've added there is, what I want to know is the best case scenario on this trade going to be worth it? So you might have your forecast date, you might set up your position and you see a really strong setup and you can get a nice smart entry. But when you do your price forecasting work to come up with a target, sometimes you'll only find, oh, gee, it's only a 3-to-1, 4-to-1 trade. It's only going to be a small move there. Is it actually worth taking this trade? It's a 3-to-1 reward to risk ratio. What if my first trade gets whipsawed out and I have a loss? Then really, if I get that same entry, and I get 3-to-1, I'm only up a net 2-to-1. It's just not really worth the hassle for a 2 or a 3-to-1 entry there. So I want to know when I take this trade, is it going to be worth it? Is it going to progress me closer to my trading goals? Or is it shaping up as a bit of a nothing trade? And finally, and arguably the most important step here is just reminding yourself who is responsible for all of this. And obviously it's us as traders that are responsible. If this trade goes south, at the end of the day, we're the ones who have to take responsibility for that trade, because if we make a big profit, we're going to take the credit. So if we have a loss or if we get it wrong, we have to be responsible for that as well. So those are the 6 steps there. Don't get caught up in just the forecast date. And I'm not saying this to downplay the fact that the forecast hasn't eventuated yet on the Australian dollar. There's enough evidence on the channel that this stuff works, and it's straight from Gann. I can't take the credit for it, but it is straight from Gann. But as you can see, sometimes some of the dates are a little bit messy there. So don't just fall into the trap of trading a forecast date. Learn things like form reading, which is your position of the market, and price forecasting, as well as I mentioned earlier. Learn trading setups that are reliable and mechanical and that you are comfortable trading. Either learn something like smart trading or put together your own trading system to give you the best possible chance of taking a low risk, high probability, high reward to risk ratio trade. Before you take the trade, always ask why I'm actually taking this trade, and ask if this trade unfolds exactly as I planned or exactly as I hope, is it going to be worth my while? And of course, at the end, remember, who's responsible? Me, the trader. So you, the trader, as well. Let's move on and take a look at the Australian dollar now based on that. As I said earlier, we do now have a higher swing bottom on the monthly chart. This is the key point up here, this 50% milestone. There's a really tight cluster at 6776. If the market exceeds there, I will say we're going up for the rest of the year and probably for a good chunk of next year and beyond as well. It's a very, very critical point there at that 6776 level. If, however, we touch that level on or around that 25th of September date, I'd expect that we would see a strong move down from there. So I'll definitely be keeping an eye on that. For the week ahead, I'll be looking to see what happens on Tuesday, Wednesday. The key level to watch really is this daily swing chart low here, because we did run up there, have a pullback, and then we've run up again to this point here. So if we then break that low there, the trend may be starting to change to the downside there. And if that's going to happen, it will show up first on the 4-hour chart over here. In his early lessons in the commodities course, Gann teaches you swing charting and swing trading. And to me as a trader, swing trading is one of the most valuable tools that I have. And it comes from Gann. I learned it first from Safety in the Market's Active Trader program. I think David Bowden, the founder of Safety in the Market, explained it a little bit better than Gann did and systemized it a little bit better than Gann did. But at the end of the day, the original source there is Gann and Gann's lessons in the commodities course. So check those out if you haven't already. But as I said, it's been a little bit disappointing on the Australian dollar, but we still have plenty of month left in September, and I'll certainly be keeping a strong eye on this market. If we run down and we put in a higher bottom there, around that 18th of September area, we may get a decent long trade up into that 67.76 area. I'll be watching that very, very closely around the end of September. Last thing I'll say, I did show this comparison in last week's episode of the Forex Form Guide, and it was 2011 versus 2025. Interestingly there, it was the 9th of September where the market actually started running down from on the Australian dollar in 2011. There's some similarities between these two markets here. Obviously not perfect, but in terms of the dates, there are some similarities there. That top is the 12th of September. It's not that far off. Our top last week, obviously this chart is a week old. It's not updated with the week that we've just seen. And that market has run up to an extreme high there. But the 9th of September, that's where the market was due to run down from. Look, I haven't written the crash off. I just think it's more likely that we are going to see a top around that 25th of September and look to run down from there. Again, for the last couple of weeks, I have put up these key dates on the Australian dollar. I think September 4-5 was likely the low. I thought that would be a high and that it would tie in with our 31st of August high, etc. That hasn't happened. So if that's the low, well, the next date being the 24th of September is likely to be a high. These are those intermediate dates that I was talking about earlier in the year. So they picked up the January low on the Australian dollar, the February low, the April low, the May high. These are good dates to watch on this market. So again, 24th September is the next one. We've got 2, 4, 6 dates left between now and the end of the year. I would say at least 4 of those should give some really good trades, and I'll definitely be watching each and every one of those and tying them in with my smaller picture cycle dates as well. That's very, very important to do as well. So we'll leave the Australian dollar there. Let's move on to the British pound now. Nothing's changed in the last few weeks that I've been watching the pound there, so I won't go into too much detail on that. Suffice to say, there is a potential double top looming around that 138 level. And if we do break up through there, there's a 148 target, 149 target up there, which is a fair bit further up, but there's a really nice price cluster forming there. In the meantime, though, it does have to get through that 138 level. And there's a similar setup brewing on the Euro US dollar as well. You can see a fair bit of harmony around that 119 level. And similar to the pound, you'd be running up into a potential double top there, maybe just a little bit further through that double top than on the pound. But both markets, it's a similar scenario where you've got a price target to watch and you've got a price setup to watch in the form of a potential double top as well. Now, again, I have to stress that doesn't mean that the market must go to those levels. There was a kind of forecast that Gann put out, and I believe it's taught in the tunnel through the air, but you can find it in Gann's Ticker Investment Digest article, which is contained in a video on this channel as well, where Gann talks about it was the 1909 September wheat forecast, where he said the price must go to this level by a certain time, and that it won't go higher than that. These prices are a different level of price forecasting. I guess you could call them a lower level of price forecasting. To me, they're still fantastic and I love trading them, but it is a lower level because the market doesn't have to reach that level. And when it gets there, it doesn't have to stop there. Whereas Gann's price forecasting using his higher level techniques like the squares would give him very, very tight and accurate price forecasts that the market must get to and would then turn around at. And that's one of the reasons that I continue to study and research Gann, because A, I enjoy it so much, but B, there's so much in there and there's so much more good stuff out there as well. Okay, a quick look at the US dollar, Japanese yen, exactly the same as it's been for the last probably 6 months or so, maybe even more. It's been a very, very sideways market there. I'm still watching for those triple bottoms. I do still think that they are going to be taken out there. Look on the daily chart, that's just awful. It's just been awful and sideways. In my opinion, the US dollar yen is a really good market, but it does have these awful sideways periods. And when it's in one of them with such low energy levels in there, you're better off staying out of it and just waiting for that market to break out of there, I think. There's a risk of churning through a lot of capital trying to get set in a period of the market like this where every trade that you take just ends up getting stopped out because the market is just going nowhere. It's just so sideways. That's all for this week's episode of the Forex Form Guide. If you did find some value in there, would really appreciate the like and the comment. And if you haven't already done so, you can subscribe to the channel to keep up to date with future videos. If you are subscribed already, you don't need to do it again. And again, if you're new to the channel, welcome. The Forex Form Guide goes out at 7 p.m. Sydney time on Sunday evenings. So until next week, I wish you all the best with your trading. Have a fantastic week, and I'll catch you next Sunday night on the Forex Form Guide. Until then, all the best and bye for now.